All right, guys. Good evening. It is, what is it? It's August 12th here. We're getting started with our options class. Going along pretty good, week in and week out, doing pretty well. Our positions are holding very, very well. We're going to go over all of them this evening, and we're going to put on a new position. As I just stated before we started this recording, I have an instrument that I'm wanting to look at with you. The trade selection, meaning the strategy, the option strategy, that is going to be up to you guys. We're going to talk about it, and we're going to pick one as a group. Whichever gets the most votes, we will go with that strategy, and we will manage it in the upcoming classes and throughout the upcoming weeks. So hope that's okay. We haven't quite done that yet, but this one's on the line between being a credit and a debit type of a trade, and we're going to go ahead and we're going to choose that as a group. So it should be interesting. First off, is there any questions before we get going anywhere? We're going to talk about the overall market. We're going to talk about each position. We're going to go over the sample trading plan that we have on the page, and we're going to place a new trade. All of that in this class tonight. Any questions? Before we get going, let's go, he says. Okay, we're ready to go then. The overall market. I just have the spiders up here. SPY. Just wanted to take a look at the overall market and get a general census of what we think is happening. In the live trading room, we've talked a lot about this look to the long side. We got a push up, pull back, actually to the 50% pullback long level. And also, if you take from these highs to these lows, it's got a 50% pullback to the short side. So we are sitting here arguing, fighting to see who's taking charge. Are the bulls going to take charge, or are the bears going to kick in and give us a short-term pullback? We don't know until we get a break. It's kind of a goofy day to be doing this class because we could get a breakout tomorrow, or we could get this thing to roll back over and start to show downside opportunity tomorrow. Who knows? So what do we got to do? We got to put on a strategy on a very, very good trending stock. So even if it does pull back, we should be able to allow enough time for this thing to go ahead and work in our favor. So think of that whenever you come to choosing your strategy as well. So anyways, I consider ourselves to be bullish to neutral. Does that sound good for everybody else? Do we have any bears in here? I'm sure we might. You know, it always happens. We're going to have some bears, but I'm assuming the most of us are still sticking to neutral to bullish on the overall market. Does that make sense, guys? You guys agree? Yepers, yes, sounds good. Agreed. There you go. So I would say we got a lot of us that are kind of looking at the same thing, guys. We're not rocket science here. We're not reinventing the wheel. We're just looking at which way the darn market's going, and then that's what we're calling it. A spade's a spade. So this thing has been pushing higher. We have not made any break of any major swings here yet. We have these little piddly swings there if you want to count them, but as far as a major pullback, we have not broken anything yet. We haven't made any new lows. We haven't done any of that yet. So we're staying fairly strong, I guess you could say. Neutral to bullish is the bias I'm going into tonight with. So with that being said, I will be looking for a stock that is trending up, okay, with an industry that has the potential to pop to the upside more so than, say, the downside. Sound good? Or at least something that's flat to semi-bullish. Fair enough, right? Somewhat flat. So, yeah, I just need it to be flat. I don't care. As long as the industry is flat and the stock is up, hey, I can live with that because we're not looking to go or push this thing out years down the road. We're looking for a month. We're looking for this thing to bounce for a month. And if we can get before then great. But so neutral to bullish, I would say so far. Yes, this is being recorded right now. Yep, we are recording this. It will be on the site. So, all right, with that being said, we can go ahead and move on forward. It's all right, Tom. It'll be recorded. There you go, Tom. I answered that for you as you were coming in here. Yeah, it is recorded and we'll be on the site. We haven't really done much except go over the overall market. We're semi-neutral to bullish on the overall market, and that's where we're at now. So let's go over the new trading plan and get any feedback that we can with that, and then we're going to dive into the current strategies that we have on, and then we're going to put on our position for tonight, and we're going to wrap it up with some questions at the end. So let me just go ahead and go in here into the members area. Let's go down to, let's go to the members homepage here. And then we will go to the option strategy page. Option strategies, and let's go over some of the stuff put in the new, because I got a lot of feedback whenever I sent out that email last weekend, and I want us all to say, yes, Adam, we like this format. Adam, I would change this format. This is a good live time for us to go ahead and talk about some of the stuff that I have on here, because I'm doing the same thing for about every strategy, at least most strategy, meaning the long calls, the long puts, nakeds, and the spreads. Okay. This here is, what is it? We got the bull put spread here. So this is a credit spread. Here is the trading plan example. What do we want to happen? Profit if the market goes sideways or trends upwards. Makes sense, right? We're selling puts. We want the market to go sideways or up, meaning that we want the option to collect time decay and buying a put option at the lower strike to limit the risk. Pretty self-explanatory. So we went ahead and put all that in there. What types of instruments are we looking for? Looking for the market or instrument that is trending to the upside or even sideways. We're wanting the market to have 500,000 plus on volume. So there's our first rule. We want the market to be trending sideways or up for a bull put spread. We want the instrument or market that we decide to pick to have 500,000 plus volume. Okay? Pretty easy, right? What are the entry rules? Technicals, make sure the instrument has broken through resistance with high volume, or the market has pulled back to some support looking to bounce. So if this thing has already broken out and we're looking to get long up here, we must have broken out on high volume, meaning that on this breakout here, we had a volume spike. Big volume as this thing was breaking through resistance. Good opportunity to go ahead and go long, put some type of spread down here, giving it some room to play out. Or we want it to be pulling back to some type of support, looking for a bounce. Okay? Technicals. That's our entry rule for technicals. Strike. Here we go. Here's something we got to start looking at for some of you that are new to options trading. Sell when the delta is between 25 and 40, and buy 1 to 3 strikes below the sold strike, meaning you're going to sell at 10, you're going to buy somewhere in between 9, 8, maybe 7 strikes. So you're going to sell, and then you're going to buy 1 to 3 strikes lower. Yep. And expiration, 20 to 45 days away. This is something, absolutely, man. This is what you need to, yes, this is your checklist for getting into a trade. This is a good checklist for getting into the trade. Management, only put 2 to 5% of your account at risk. 2% if you're more conservative. Pretty self-explanatory. What's your risk? How much of your capital? How many contracts can I trade of this? Do the math. So that's a good rule of thumb. Just get the math put together, and there you go. Exit rules. Here's where I preach, not just in options trading, but the everyday in the live trading room. Exit management, guys. This is more important than the entry, bar none. Whether you're day trading, options trading, swing trading, investing, whatever, how in the world are you going to collect on all that work that you just did? So if the instrument breaks below support, here we go. If the instrument breaks below support, don't do anything if there's more than 20 days left. So do nothing. You got a lot of time, do nothing. If there's less than 20 days, get rid of some of the position. Some of you is going to want to get rid of all of it. I'm saying at least get rid of half. Get rid of all your position if there's less than 10 days, meaning if you're down below your support and you got less than 10 days and there's a chance that you're not going to get up there, or obviously you're not having enough time for it to get back up there, get the world out of it because it's really going to start getting expensive. So if you can just get out of it, you can probably cut about a third, if not 2/3 of your loss off if you just get out earlier and just accept it and move on to the very next position. So keep these rules down as a nice checklist for you. Exit. Here's a good one. Exit. Get rid of all if there's 7 to 10 days left. Get rid of all of it. You're done. Take profits if you achieve 50 to 75% of your max profit abilities. 75% if you're more aggressive. In here, we preach 50 to 75%. Some people's going to preach 75 to 80%. It's completely different for each individual. Some are going to tell you to hold on. I would rather take my 50 to 75%, allocate that capital towards my next trade, rather than hold it for an extra 20% over the next maybe 2 or 3 weeks. Does that make sense? I'm not willing to hold for an extra 20%, and maybe the market will stay up that high, and I'll get an extra 20%. Or I can use that money that I just got, put it into the next trade, and that way I'm not wasting 2 or 3 weeks, depending on how much time you got left in that position. And I can go ahead and push that money towards another position. Just my personal preference, guys. I think it's a really good rule of thumb as well. What should I do on a daily basis? Monitor your positions daily. It doesn't take much, guys. If you're not putting in a new trade, just log in, look at your account, look at the chart, see what the price did, and then you can go away. Basically, just monitor it every day and watch to see if it breaks support or less than 10 days to go. So if you got support that you broke on this position or you got less than 10 days to go, you can go ahead and work on these exits if that's the case. Constantly keep watching over other markets and instruments to add them to your watch list for possible trades in the future. All right. Any questions, guys? I've already gotten probably 6 to 8 emails about this when I sent this out over the weekend. So I'm very thank you. Yeah, I know I got your email, man. Thank you. I'm taking into consideration. I will be editing this. John. There you go, John. I'm serious. John, I know you're not making a joke here, but stuff like this, the font may be a little small. I'm dead serious. Tell me that because I will make it bigger and a little bit easier to see. There you go. Thank you for the feedback. John, you're going to be able to see all of it, though, when you get your eyes fixed, though. It's going to be too big for you. But anyways, any questions, guys? This is what I'm going to be doing. This is the type of stuff that I said last week that, we're going to have some rules written down. We're going to start building the trading plan together, and we're going to use this whenever we take our trades in here. Okay, Tom. Tom says he's been looking at the IV percent above 50 ideal. You're not going to get a lot of that nowadays, Tom. We've been doing a lot of selling, and that's going to go into play with our trade today. Recently, we've been talking a lot about IV percentile, and if the percent has been 25 or more, we're looking to be sellers nowadays. Anything less, we've been semi-teetering on the want to buy, meaning a debit spread. So actually, Tommy, I just now read your comment. So he said he actually goes down to 25 to 30. So that's basically what I just now said. So remember that, guys. Maybe we'll implement that rather than me talking so much about, go up here, rather than me talking so much about delta. Maybe I should add in some implied volatility stuff, which I need to anyways. So we'll start to add in implied volatility on each of these positions and go from there. So thank you for that feedback as well. So IV and font. Plus, I have a couple other things with some emails that we're going to add. But this is what we're going to have, this little checklist for each one of these strategies, and we'll go from there. But thank you for the feedback, guys. I still got all you guys' emails that did email me, and I will be making them adjustments as time comes. But I do enjoy you guys' feedback because it's going to help me improve on all this. But I think we got a pretty good checklist for for putting on our positions in here. So, all right, let's go ahead, and if that's okay for everybody's okay with that little list. We're going to have to start talking about our current positions because we have 3 positions on right now, and we're looking to put one more on tonight. So we just, it's not going to take a lot. What we do tonight is what I think you should do on a nightly basis. Just come in, check the markets, see where it's at, see how things are trading, and then go on. Now, it'll take you a fifth of the time that it's going to take us tonight because I'm going to talk a lot more about it. I'm going to answer questions about them and so on and so forth. You're just going to look at them, bang, bang, boom, move on to the next. Look at the next. It's just taking a minute or two, a couple minutes, depending on what you got to do to it. A lot of times you're not going to do anything. You're just going to let it go. And you just want to check up on it. But we're basically going to do what you need to do every night. And then we're going to move into our trade of the week. So. All right, let's start with our 2 oldest positions. Let's start with the one that I'm the least fan of, Microsoft. What do we need to happen on Microsoft? Can anybody tell us? I know you're going to say push higher, but what do we really need Microsoft to do? Blast off, speed. There's the first 2 answers I got. Absolutely. Yes, they're both right. Not get stopped. I like that one. Spike. Yes. We have a straight call on here, guys. So we were a little bit more aggressive. It was one of them deals where we're trying to implement different strategies. We had a recommendation for it that week. So we went ahead and we took a call. The reason we took a call, at the time that we took it, we had low IV. We had a directional market, meaning the market was pushing higher. We had low implied volatility, and we were at support, ready to bounce. And historically, how has the bounces been? Big shot, quick shot, quick. You know what I'm saying? Quick. So all we need is exactly what you guys were just saying. We had a lot of feedback there. We need a quick pop here, guys, because guess what? We bought a call. Anytime you buy something, guess what happens? TD. That doesn't stand for touchdown. That stands for time decay. Time decay. And that is working against us. So the longer this takes, the more time that the more price, the more it's going against, the price is going against us because we're losing money every day that this goes sideways. We're losing money. Now, granted, we have a stop loss out there. We bought this thing for $1.44, and we actually ran the numbers last week. If it fell down here below these 42s, which I thought was support, and we were talking about support down here, then we were going to go ahead and get stopped here at 44 cents. Now, it happened to be a nice round number. I didn't mean for this to happen, but it actually came out at exactly $1 loss if it were to drop down that much. We've not been stopped. We're still in this position. So we're actually looking for this thing to go ahead and get a quick pop here, guys. See if we can get this quick pop to the upside and get a profit. We go over here to the trade tab. We can type in Microsoft. We're long the 43s. We're long the 43s here. September 1, I believe. September 1. So we still got 25 days left, 24 days left in this. And we're long the 43s. So if I were to click on this, what are we at? We're at $1. Basically, it's trading at $1. So we're long from $1.44. We're long from $1.44, and we're trading at $1 right now. So we're down 44 cents. We're down 44 cents. We just need this thing to have a quick pop to the upside. If that's the case, we can go ahead and see some of these prices really start to rise and us get into the profits. But when you have a call on, when you have any type of straight call or put on, time will start working against you. Now, let's think about this from another point of view. What would have happened if we would have sold a 43 put? We bought a 43 call. Would we be profitable or at a loss right now if we sold a 43 put? Both of these are directional plays, somewhat. One's really directional, one's semi-directional. What are we looking for the market to do if we sold the 43 put? This is just a little crash course for some of you newer options traders. If we were to buy a 43 call, we want the market to go straight up, basically. If we sell a 43 put, what do we want the market to do? Go up. Credit would be profitable. Stay above 43. Stay or sideways up. Neutral to bullish. Okay, we're getting a lot of good. You guys already know. You guys know. You guys know what you're doing. Whenever you sell a put, it is a neutral to bullish position. So if you were to buy a call, it is a bullish position. You lose money if it goes sideways, and you lose money if it goes down. If you sell a put, you lose money if it goes down a lot. You make money if it goes sideways, if it goes up, and even if it possibly goes down a little bit. Why? Anytime you sell something, you're dealing with time decay. Okay, so we're going back to the basics real fast before we move forward, because I did get a couple emails and I really wanted to hit on this. You guys know, I hope I'm answering your questions right now from them emails that I did get, so thank you very much. Yeah, I agree, Tom. Theta can bail you out a lot. Time decay can bail you out a lot if you're a seller of the markets. I predominantly am. In my, I will do a lot of credit plays versus a debit plays. Now, you're not going to make as much, but you're just going to consistently grind them out more and more. Better profitability shots, percentage-wise, not from the home run. So what we're looking to do here is we're looking to get another one of these quick pops to the upside and then get the heck out. If we can get a 1 or 2 day really nice big pop in Microsoft, have it go up to a couple bucks, we're going to take our money and we're going to go home, cash out and go home, because time decay is not what we're looking for here whenever you buy calls, right? Time decay goes against you. So we want these moves to go faster. So no change right now. You see Microsoft's trading at $1 right now. Our 43 is. So all we need to do is see a couple little pops here and really don't need a lot. Yeah, right, Tim? I'm aware. So we'll keep an eye on that as well. So, all right, any other questions here about our Microsoft position, guys? Any questions at all? We are looking for a pop here. We're still holding our support. We actually got a really nice pop today. We have the stochastics rolling to the upside. We got the MACD rolling to the upside. Realistically, everything is working for us. We just need to see further follow through. We need to see that pop. So no more questions. We're just holding here. I'm going to leave my stop down there at the 44 cents. Really don't need to change anything right now because we got plenty of room here for a stop to work. And if it starts to roll to the downside, I don't want to be in this anyways. So I'll lose $1 on this position and go home and be just happy. So that's that. So let's go ahead and move forward here. We will talk about BlackBerry. We have a profit target setting out here for BlackBerry, guys. We have a profit target setting out here for BlackBerry. Let's go ahead and talk about what we've done here and where we're at. So, we sold BlackBerry on this day. Okay? what I seen was when I zoomed out, I seen a really good resistance here. I seen a market that likes to sell off, trade sideways, and then sell off, trade sideways, sell off. We sold off, traded sideways, and I'm looking for that extra sell off. Now we've done a sell off sideways, and I'm looking for that next drop to the downside. I am still confident in this position. What we have done was we sold the 10s and we bought the 11s. So as long as we stay below our resistance here, we're going to go ahead and be profitable. Time has been working for us, and just all this time decay, as we just talked about time decay, guess what? Time is working for us. This thing keeps on going sideways, that's fine, because we'll make money as long as this thing goes sideways. We're protected all the way up to this resistance line that you see. So there's still a lot of room for this market to trade, for us to be protected all the way up to this resistance area. So we got break even below that, profitability below that. If we get another drop to the downside, I have an order out to buy this thing back for 12 cents. If we get any type of drop tomorrow, any type of major drop over the next week or whatever, we're going to get that filled. So we got an order out at 12 cents. I'm going to leave it at 12 cents. I'm not going to get too greedy. We've been holding this for quite a while, and it's really gone nowhere but sideways. So if we get one of them 1 or 2 day drops, this is going to get filled, and we're going to be profitable, and we're going to make that 50% is about where it's out, and we're just going to accept that and move on. Anybody want to comment on this or change this position? Because I know we're all in this, or at least most of us are in this. And John said he's got his order at 13. I know, what was it? Steve, I think, said he's getting a little more aggressive, putting it at 9. I'm not sure I came up with the number, but 9. T said something about 10 cents, and that's fine too. It's just a personal preference. You guys can work the formulas and work the numbers to see what you're going to try getting out of it. That's your own, your own personal preference, and you can do what you got to do. But I'm looking to buy this thing back at 12 cents. And I still have a working order out there. So, any comments on this one, BlackBerry? Tap the top of your monitors. Okay. We do that every so often. It's been a long time since we've done that. We used to do that in the live trading room. When we get short a position and it's just not dropping, everybody tap the top of their monitors. That usually gets the market to go down. So, all right. So that's that. We've already got that going on. So no change there, guys. No change there. If I go back to the trade tab options program page, I want to make sure it's all updated for you guys and everything's good to go there. We have our stop out. We have our stop here on Microsoft, as I said, at 44 cents. And we got our option here to buy back the BlackBerry for 12 cents. All that's already on here, so we're good to go. Now let's move forward to the Southwest position. There's no comments. We'll move on forward there, guys. Southwest, you're welcome. Guys, pretty easy here pick for me, to be honest with you. I love this stuff. This is it for me, guys. I will trade this and 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 keep on working this thing until it fails. That's just kind of how I'd like to trade. Every time you get an opportunity, I'll look to trade it again. So all we did was we had a clear resistance that now becomes support. And guess what? That's whenever we bought. Right there. We ended up obviously selling a put spread. We collected 22 cents on it. Now we took it a little bit smaller. We took to 26.24. So if you do the math on that, we sold the 26.24, meaning that our break even is 25.78. So way down here is our break even on this position. We have all this room for it to work by expiration, and we can be profitable. In this entire width here, we can be profitable. So we got an order though. As I said earlier when we were talking about our trading plan, my personality, I like to go ahead and accept my profits, and rather than hold this for the next, what is it guys? We got on September's. So what's September got? 40 days here? September got like something like 40 days still to work. If I can get a 1 day big pop, I'm going to be out of this. So rather than hold this for 40 days for an extra 30%, I'm going to go ahead and take my 70% or whatever I do. I got an order out at 10 cents. So I'm going to collect 60 to 65 something percent on this. Rather than holding for the next 40 days and keeping that capital tied up for 40 days, I'll accept myself to maybe not make that extra 30% and allocate it towards the next position. Okay? Rolling over, just continuing to trade, continuing to roll that money into the very next position, and so on and so forth. So that's my mindset behind it. So I do have an order out here to buy this thing back for 10 cents. I'm really not sure what we're trading at right now, to be completely honest with you. Does anybody have a clue? 38 days, not 40 days, 38 days. Sorry about that, guys. Let's go ahead and look at this position to buy the vertical. Let's do 24. It's at 10 cents. Oh, I should be getting filled very soon. So if we get a pop in the morning, today it was at 30-cent spread, no fills were happening. Okay, John. So if we get a pop tomorrow, guys, we should be able to see a nice fill here. Yeah, it depends on where we're at here. But at the mid here, let's go ahead and just leave our order out at 10. If we get a pop here on Southwest, we should be able to get a fill there. I'm leaving mine at 10 cents. I'm not going to try asking for too much more. Let's just go ahead and leave it there. As you see here, as this market continues to get this tiny little pop, we're actually getting a little bit of a drop here in the IV. Meaning what? Options will get cheaper. What are we looking to do? We're looking to buy it back cheaper. If the IV gets cheaper, lower, the price gets cheaper, means we get a fill. Okay? So any type of pop in the market tomorrow, any type of pop probably in the next couple days, we should be able to get another position off there. So we're really looking pretty good. I don't want to toot our horn right now, guys, because that never leads to anything good. But I did want to touch on the fact that we do have a break even way down here below any of this support, and we got time. So even if it pulls back, we got time for it to get a bounce, and we can still be profitable based on time decay, or we can get a little 1 or 2 day pop over the next couple days, and we can be profitable that way. So we're really sitting in a pretty good spot right here on Southwest. Any questions about Southwest or any input that you guys may have? Them are 3 positions that are still working. Any questions, guys? Before we go into the next portion, and that would be placing a position. Let's do it, he says. All right, that's fine with me. All right, so we are bullish. We're bullish on the market. We're bullish on everything. So why don't we get a bullish position? What do you think? All right, we're looking to trade something that an industry that is pretty popular. It's in finance. We have the consumer finance is the industry. It's actually at the industry itself is at support if you were to chart it. The industry itself is actually at support. Let me actually chart it for you. The industry itself is actually at a support. Now, you can't see this all that well, but there is a line of support in here. We are overbought on the stochastics, rolling up on the MACD. Everything looks good. Even if it just pops up here a little bit and is rolling over, it doesn't matter. Even if we get a little pop, the industry itself is still net, still positive. We've not broken any support. We've not broken down anything. We're still good. You guys agree? You guys agree? Even yeah, it doesn't matter, but even if we are looking to possibly start rolling over, that's fine. All I need is a little pop because guess what? I'm going to pick the most trending stock or a stock at support. That's part of my trading plan. I'm looking for a stock that is trending or a stock that is at support to trade. Sound good? Kopish? All right. What's it going to be? What do you mean, John? There we go. What are we looking for? If we're looking bullish, we want a stock that's trending or at support. What do we have here? Well, I would say we're pushing higher. And I would also say that we are at support. Oh, I see, John. Yep, I agree too. What do you guys think? What do you guys think of this position? We bullish? We at least bullish to neutral on this position? That's all we're looking for, is bullish to neutral. Because that's what we are on the market. We have the stochastics and MACD, both ready to roll up. Look you down below here. I'm getting lots of people saying this looks good, great. I like it, blah, blah, blah. All right, so thank you for the feedback, guys. So we got our position here. We're looking at Capital One. We're looking at Capital One here. I like the position from a technical standpoint because what are we looking for? We're looking for bullish to neutral because that's what we are in the market. And we're looking for a clear support. I'd say we got some good support here around 77. What do you think? Actually, about 78. Right here at 78, we got all our support that we possibly need. Don't you agree? I'd say we have some pretty good support there at 78. So, I'm going to ask the question, what type of trade you guys want to do? This is where I really do want feedback. I don't care if you're right, wrong, indifferent. There isn't a right or wrong answer. What do you guys want to do here? Let me lay out the facts. We are sideways to bullish on the industry. We are sideways to bullish on the instrument. We have stochastics ready to roll up. And we have MACD ready to roll up. But what is our implied volatility? Okay. All right, I am getting a complete mixed. I'm going to have to start adding these up. Some of you are wanting to sell put spreads. Some of you are wanting to buy because of low IV. Some of you want, wow, I got actually a straight call here. I got a call spread to protect it. I'm getting some put spreads still. Believe it or not, I'm still getting put spreads, guys. I'm serious. I'm going to leave this up to whichever group decides to. So if you have an opinion, right now, believe it or not, selling a put spread is winning this battle. You can answer in more than once. Yes. Let's have some fun with it. Hell with it. We're going to look at it, John. I'm just looking at the chart here for right now. John already went one step further. All right, let's pull up here on the trade tab. It's not coach, is it? I thought typed in coach. The current IV is 38%. You guys see this? Now, this isn't the end-all be-all, but if you come over here, you can look at the current IV percentile, 38%. I have a feeling some of you are already looking at some of these bigger numbers because I want, without a doubt, the clear winner was sell a put spread. That was the clear winner. But John actually said the IV is 38%, and he went ahead and peaked. He went over to the trade tab and went ahead and peaked. So, with that being said, I want to go back to the charts and look at the graph down below. What do we actually see here? We have a high here, a high here, a high here, lows, 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 high here, highs a little bit higher. So would we be completely nuts to think that the IV can drop from this level? I don't think so. We probably are. Yeah, right? We probably are. What are you guys thinking? Okay. Yep, I'll sell it with you. All right. The winner is sell a put spread. So, what are we going to do? You remember our checklist that we went over before we started looking at our positions today? In our options strategy page, our trading plan? That was a bull put strategy. Okay? We can go ahead and put that to work. So, with that being said, let's dive in here and let's find some prices. What are we looking for? 20 to 45 days out. We got a clear winner. 38 days to go, 3 days to go, 128 days. Ding, ding, ding. We got a winner. 38 days here. We'll choose September's. September's. Okay. We're looking to sell puts. I want to sell put spreads, Bob. Yep. All right, so go back to the chart. Where's our support? As long as this thing stays below 77.50, 78, we're looking to profit, right? Okay. So let's go and look at some of these prices and let's see what we need to take here. So we're on the put side. We're on the put side, and we want the price to stay above 77.50 to 78. So what are we going to do? We're going to work with these instruments. We're going to work with these. Let's go ahead and go out and let's just click on, what are we looking for? We're looking for something to be about, looky here, look at our delta, 77.5s, 34. Does that meet our parameters? I think so too. Yes, it does. Okay. What's that give us? If we sell the 77 halves and we buy the 75s, we're looking at about a 71% to 70% profitability position. You guys like that? You guys like that? Because if we sell the 77 half at 64 and we buy back the 75s at 80% probability, meaning that, let's see what we can get. Let's see what we can get. Let's just go ahead and right-click, sell, vertical. We're looking at 53 cents. So, 53 cents. What's that mean? 77.50 is where we're selling. We're collecting 50 cents. Let's just say 50 cents. That makes 77 our break even. Now, if you go over here to this little scale here, 77 is going to be about 68 to 70% probability of success. Does that make sense? It's in between these two numbers, and depending on what it actually comes out to, it's right in that ballpark, around 68 to 70%. Does that meet our parameters? So we got time working for us. We have tight spreads on these positions. On a dollar here, we got 10 cents wide. We're going to split the gap at 5 cents, so $1.05. And then up here at about 54 cents. So we're going to split all this, and we're going to get it at the mid at 53 cents. Does that sound good, guys? We're going to place an order to sell the 75s, sell the 77.50, buy the 75s, and we're going to collect 53 cents. Let's look at, all right, nope. He said, let's look at the 75, 72.50. That's fine. Let's just change this. Let's put this at 75, and we'll put this dude at 72.50, and we're getting 21 cents. So is that worth it? We're selling the 72. We got about a 90% opportunity to make money here. Very, very conservative. Let's look at the chart. That means we're going to sell the 75s. And right here's our break even, about 74.80. Are you willing to take half the income to get your break even right here? Or would you rather get double the income and have your break even right there? I'm getting some no's. John said nada. No. 77.50, 75. 77.50, 75. You are alone, it sounds like. Yep, it actually doesn't meet our rules. You're right. It doesn't meet our rules. It is actually too conservative for the rules that we laid out today. So, with that being said, with the rules that we laid out today, 77.50, 75 for 53 cents. If you hit confirm and send, you're going to see here. If you confirm and send, you're going to see here that we have, let me just put this somewhere where we can all see it. You're going to see that the break even here is at just over, so 70, basically 77 bucks. That's where we wanted it to be. We wanted break even to be somewhere below the 78 to 77.50. Max profit, exactly what you brought in. This is trading a 10 lot. Obviously 30 bucks in commission, so $500 is what we're looking to make on this position. Does that make sense, guys? Okay. And the max loss here is, well, $2,000, but we obviously are better than that, so we will work with it. How does that come up? All right, very good question. How does it come up with max loss? Pretty simple. We had 77.50 and 75 are our two strikes. That is $2.50 wide. We are collecting 50 cents, 53 cents actually. So let's just round it to 50 cents. That means our max loss is $2. Our max profit is 50 cents. That makes sense? So if you go over here, 50 cents, our max profit, $5.30. It's actually 53. Is, I'm rounding here. And our max loss, $2, right there, 1970. The reason it's 1970, not 2000, is because it's actually 53 cents, not 50. I just rounded. Okay? You got to pay for some commissions? Yep. That is all of it, Bill. Yes, it is. That is commissions? Yes. Yes. Okay. Any questions here, guys? You guys like it? Let's write it down. Let's record this sucker. Let's edit this page and let's record this, guys. Let's get her down on paper here. You're welcome. Okay. Oh, shoot. All right, let's do this. Let's put her on here. Anybody have any questions about this position at all, guys? We're doing, what are we doing? We're doing Capital One. We're doing a bull put spread. We're selling, oops, I don't put that, do I? Sell the 77.50. puts. What are we collecting? 53 cents. And it's a day order. Remember, it's a day order. If we do not get filled tomorrow, I will come back and send you an email alert on what to do moving forward. Okay? So that's how we do this in here. I will send you an email letting you know what to do moving forward. But for now, we're going to leave this as a day order. We're going to buy the 75s. And what's the expiration? 7. What do we think, guys? Good? What are we thinking? We like it? Good? Any questions about any of that? You're welcome, man. You're making money finally trading options. Hey, I'm happy to hear it. If you're making money, I'm happy. So we're all happy. So anybody have any questions? This is a little bit wider, a little bit more credit than we've taken in any of our positions. Look at the ones so far. We've taken 27 cents, 27 cents, 22 cents, 22 cents, and 53 cents. Okay? Any questions? Oh, my bad. Any questions on this, guys? So let's review. Let's review. We are bullish to neutral on the overall market. Bullish to neutral on the overall market. Let's go back, look at our Microsoft. Our Microsoft, we are looking for a 1 or 2 day pop here. I would love to see it retest these highs in about 3 days. That would be great. I would be out of this position. I would move on. We would all go home happy, and things would be great. Okay, so we're looking for a pop in Microsoft, a quick pop in Microsoft. What are we looking for in BlackBerry? We're just looking for stability here. We want to see this sucker drop. We want to see this thing really, really respect us and drop. One good drop or 2 good days down, and we will be filled here at our 12 cents. We got a 12 cents order out here on BlackBerry, just waiting for it to be filled. And then we got another position here with Southwest. As soon as this dude loads, there we go. Southwest is just a beautiful chart. It's an awesome trading chart, awesome here chart to trade. We're getting it to roll over, getting the implied volatility to roll over. Great, because guess what? We want to buy this sucker back cheaper. And if this thing has another day or 2 pop to the upside, we're going to get filled here for our 10 cents. And then today we put on, not Coach, but Capital One. And we're looking for a pop here. We have a bullish to neutral market, mainly bullish, and we're at support. What do we look to do? Bull, put, spread. What are we looking for? We're looking for a trading market or a market that is testing support. What do we have here? We have a market pushing higher that is testing support. Perfect. And we sold the 77.5, and we bought the 75s, and we took 50 cents on it. Any questions here, guys? We've got that already filled in here? Yeah, we do. Okay, I've got it all filled in down here. Nothing else for me to do except for let this sucker work out. We are going to go ahead and send that order off. and it's working. All right. Any questions here, guys? Any questions at all? We have a working order, and I will keep you guys up to date going into tomorrow, whether we got filled or if it doesn't get filled, what I am going to do about the position, whether I'm going to adjust it or I'm going to re-put it on or whatever it may be. Are there any questions here, guys? Another great night. We had a lot of stuff to cover. Just been a very, very active night, so we had to get a lot of stuff in, and hopefully coming into next week we can, maybe we'll still have these positions on. I don't know, guys, but maybe we'll get a couple filled sometime this week before we meet again. But we'll see. They're all good ones, aren't they? Yeah, they're all good ones. I'm messing with you. All right, any questions? Any questions here, guys? This is recorded. It will be put right here on this page, just like they always are. Any more questions here before we wrap this dude up? I want to thank all of you for coming, spending the night with me. We got through it in about an hour. That's good. One time we went a little long. I like to get this stuff in and get on so we can move on and I can get it posted because I like to get this posted tonight. That takes time, but you're welcome. You're welcome. I think it's a good one too, but we won't know until it can play out. Bill, under the my account page, you can change your information. If not, get a hold of me and we will get her figured out. But I appreciate that. So, all right, guys, that's it for tonight. You guys have a wonderful rest of your evening. We'll see some of you options traders obviously next Tuesday and in our daily alerts and emails. For all of you that are in the live trading room, I will see you first thing in the morning, bright and early. Thank you very much, D'Angelinas. Thank you, guys. Bob, thank you. Thank all of you guys for all your nice words, every one of you. Thank you very much. Okay, no problem, Bill. Well, that's fine. Alrighty, guys. Thank you. Have a good night, and I will see you when I see you. Bye-bye.